repeat that again. I think yes, some of the
So earnings season just over last year, and we saw some of the companies actually did better than the year before. So which helped? Stronger, was it because of stronger ringgit? Was it because of stronger Brent crude oil prices? So which one?
I think it's a combination of factors mentioned earlier. The exports last year has been a surprisingly good year. And when Bank Negara announced that our GDP growth was 5.9% last year, I think many people were caught by surprise. Yes, people are still complaining about rising cost of living and all, but I think to be fair, better corporate earnings results should be partly attributed to the stronger economic growth as well. So it didn't actually lift everybody, but it lifts some companies. As for the stronger ringgit and recovery in oil price, I think it's a double-edged sword, but bear in mind that some companies, they did some cost optimizations. I think that the clean house, that we should not take that away from them.
So like what you say, the better numbers did not lift everybody in the sector, right? So which sector or which company actually saw better numbers out from this?
Oil and gas and plantations, but again, it's not all companies benefit.
Now, one thing you mentioned, you talked about in the story, is that small cap companies they tend to provide higher dividend yield if compared with their mid caps and super big caps companies. So why is that?
Okay, when we say that in our story, bear in mind that it's totally based on the average number. So it doesn't mean that all small caps can provide better dividend yields than the big caps. But if the numbers don't lie, yes, on average, actually it did. And there's a reason to explain that, because small cap stocks, they're actually priced lower, right? Some of them are penny stocks. So the cost of entry for investors is lower. So I mean, in return, your capital appreciation and dividend yield can be higher. As for the big cap companies, yes, they can pay dividend consistently. In terms of absolute amount, dividend per share, yes, it's high, but their share price is also priced high. So you can't expect them to deliver superb dividend yield.
Because it's already expensive anyway.
Yes, yeah.
So when I look at the chart, right, half of these top small caps companies, they saw a decline in their share price, although their earnings are pretty decent last year, right? When you look at MCorp, when you look at IFCA, MSC, their share price actually declined quite a lot. So are they underrated? Should we put money in?
I think, yes, some of the companies, they are undervalued, but bear in mind that profit taking is also taking place. So some of the better earnings results has already been priced in earlier. And when we spoke to some of the fund managers and remisers, they pointed out that when the markets go down, everybody goes down. Okay, but when the market recovers, the first liner, they will lead the way to recover, but the second liner and third liner they are rather slow. So if you look at recently, Dow Jones dropped by 666 points last month. And ever since then, the KLCI has recovered. Even the super big cap, they all bounced back. But the small mid caps, they have yet to bounce back.
So I think if Brent crude oil prices continue to recover and then ringgit continue to strengthen, then this year we probably see better GDP numbers. So which sector should I put money in?
Yeah, I think oil and gas sectors and plantation sector is something that definitely we should watch out, because as the commodity prices recover, these are the sectors we cannot ignore. But again, investors should take a bottoms-up approach to look at individuals, companies' fundamentals.
For more on the stories, pick up a copy of The Edge Weekly at all good newsstands.